Good afternoon, and welcome to today's Lunch with Mia Homeowners Insurance. My name is Gia Wilkerson, and I'll be the moderator for today's event. Your home is one of your biggest investments, and to make sure it is protected properly is very important. Today, we are joined by the Consumer Education and Advocacy Unit and the Rapid Response Team to discuss the importance of maintaining your homeowner's insurance, understanding force-placed insurance, and to provide you with a few tips to help with shopping for homeowners insurance. Before we begin, just a few housekeeping rules. This event is being recorded. Please leave phones and computers on mute for the duration of this event. If you are not presenting, please keep your camera off. If you do have questions throughout the event, please place those questions in the chat box and make sure that they are addressed to everyone, as we will have a Q&A session at the end of the presentation. And now, for our first topic, we will have Ms. Mary Jo Rogers speaking about the reasons to keep your homeowner's insurance. Mary Jo?
Good afternoon, everyone. So we're going to go over 5 reasons to maintain your homeowner's insurance coverage after paying off your mortgage. Next slide. Your home is likely your largest asset. Next slide. Smaller losses can still mean big expenses. Next slide. Homeowners insurance helps you pay to live somewhere else if you can't live in your home due to a covered loss. This is called additional living expenses. Next slide. Homeowners liability and medical payments coverage can help protect against lawsuits. If you cancel or let your homeowner's insurance lapse, it may be difficult to find a policy in the future. Next slide. For information on shopping for homeowners insurance, we suggest that you visit our website, www.insurance.maryland.gov, or you can call us at 1-800-492-6116 or 410-468-2000. We have lots of brochures and information about homeowners insurance and tips on shopping for homeowners insurance, as well as rate comparison guides, where you can compare the rates of 50 insurers to aid you in shopping for homeowners insurance.
Thank you, Mary Jo. Next, we will have a discussion about force-placed insurance with Mary Jo Rogers and Patricia Dorn.
Thanks, Gia. So I have some scenarios in front of me. I'm going to present these scenarios, and these are about force-placed insurance. And as we go through them, I think it'll become clear what that is. I'm going to present the scenarios and then ask Mary Jo a question, and she is going to answer the question. And so first, Mary Jo, although many lenders include the premium cost for homeowners insurance in the monthly mortgage payment, and they hold those funds in escrow until the homeowner's insurance premium comes due, this was not the case for Ben and Monica. Instead, Ben and Monica were responsible for paying the bill directly to their insurer. So they paid their homeowner's insurance directly to their insurer. But when they received the renewal bill for their homeowner's insurance policy, they didn't have the money to pay, and the homeowner's insurance was canceled due to non-payment. Shortly after, they received a notice from their lender who had obtained a force-placed insurance policy on their home and was increasing their mortgage payment to include the cost of this coverage. So can Ben and Monica's lender obtain insurance on their home and require them to pay it?
It depends upon the terms of their loan. Mortgage contracts typically require borrowers to maintain homeowners insurance at all times during the life of the loan and authorize the lender to obtain coverage at the borrower's expense if the borrower does not maintain the insurance policy. When the lender obtains coverage under such provisions, it is called forced placed insurance. The lender has a financial interest in the property and wants to make certain their interest is protected in the event the home is damaged by a covered loss. But it is important to remember that forced placed property insurance coverage generally provides coverage for the lender only, not you, the property owner.
Thanks, Mary Jo. All right, so the next question. Ben and Monica calculated the increase in their monthly mortgage payment and determined that the annual amount of the increase is significantly higher than what they were earlier paying for their homeowners insurance. So can they make their lender shop around for a lower premium?
Probably not. The lender is the policy holder, not them, and it gets to choose the insurer.
All right, next question. If Ben and Monica are willing to accept those additional costs, is there any reason why they should consider finding coverage on their own?
There are a few reasons why Ben and Monica may want to find their own coverage. The lender's policy may not cover their personal property, nor provide other coverages such as liability protection or coverage for additional living expenses. Also, if there is a covered property damage claim, the insurer will issue the claim check to the lender, who may use the money to reduce the amount owed on the loan rather than repairing the property. By shopping for their own policy, Ben and Monica may be able to obtain a policy which provides them more coverages and allows them to choose policy limits. They may also find a policy at a lower cost.
All right, thanks, Mary Jo. So what if Ben and Monica are finding it difficult to obtain homeowners insurance?
They can call around and keep trying to obtain an insurance policy. Just as insurers have different premiums, insurers also have different underwriting requirements, and a different insurer may offer a policy that meets their needs at a cost they can afford. If they are unable to obtain insurance for their home from a private insurer, limited insurance protection may be available through the Maryland Property Insurance Availability Program, known as the Joint Insurance Association, JIA. JIA can be reached at Joint Insurance Association, 3290 North Ridge Road, Suite 210, Ellicott City, Maryland, 21043. And their number is 410-539-6808 or 1-800-492-5670. And their website is www.mdjia.org. Typically, a policy issued by JIA offers a property owner more coverage at a lower cost than a lender's forced place policy would.
Thanks, Mary Jo. And I went ahead and I put that address and the contact information in the chat if anyone wants to check out the link, etc. And so I'm going to move on to another scenario, but this is a scenario still about forced placed insurance. So this is an auto insurance one. And obviously, this is, we're going to be talking about homeowners insurance. I do think that this will help understand the idea and the concept of the homeowners insurance forced place as well. And so Tina bought a car by financing the cost. Her previous car had liability coverage only as required to obtain her tags. So Tina knows that she's required by Maryland law to buy insurance before she can get her tags. So Tina was hoping to keep her insurance costs low and didn't plan on getting full coverage. comp and collision. But when Tina met with the finance person at the dealership, she was told to get comp and collision coverage per the terms of her loan. The next day, she called her insurance producer to add the coverage. But when the insurance producer quoted Tina the additional cost, she decided that it was more than she could afford and didn't take the coverage. So in this situation, and we'll just go through a couple of these questions, in the auto insurance situation, can her finance company make her get the additional coverages?
Yes, if the terms of her loan require that she maintain comprehensive and collision coverage.
Okay, and then what happens in this auto insurance scenario if she doesn't get the coverage?
Her lender will likely obtain this coverage, force-placed insurance, and pass on the cost to her, increasing the amount of her monthly car payment.
Okay, excellent. And I think we'll just keep it at that for the auto insurance, but I think it's important for people to understand, like, if there is a lender involved and you don't get the proper insurance, that essentially that they are requiring that they can, in certain situations, they can force place that insurance. Thanks, Mary Jo.
Now we are going to get some tips on shopping for homeowners insurance from Ms. Robin Lumbell.
Hello. Okay, so today we're going to go over just 5 tips for shopping for homeowners insurance. So you definitely want to comparison shop. Make certain you provide the same information to each company or agent that you compare policies that offer the same types of coverages with the same deductibles and coverage limits. This way, you will be comparing apples to apples, and you will be able to tell how much money, if any, you are actually saving. You may want to contact several insurance companies or agents, as well as ask your friends and relatives for recommendations. In addition, some banks, employers, and special interest groups offer insurance directly to their members. You can also refer to our brochure, Homeowners Insurance, a comparison guide to rates, to get an idea of cost. And this brochure is available on our website at www.insurance.maryland.gov, or you can call us directly at 1-800-492-6116 to request a copy. Next slide, please. So you want to ask about the deductibles, and a deductible is the amount you agree to be responsible for in the event of damage to your house, such as wind, hail, accident, fire, or vandalism, before the insurance company makes any payments. If you select a high deductible, you pay more out of pocket for any damage. However, your premium should be lower. So you want to ask if there's a separate deductible for wind, hurricanes, or other storm losses. And if so, how is it calculated and applied? Next slide, please. Also ask for discounts. To help keep your premium down, ask what discounts the company offers. For example, premium reductions may be granted if you buy your homeowners and auto insurance from the same insurer, or if you install a security system and smoke detectors. Some companies offer discounts to senior citizens, members of groups or associations, and non-smokers. Next slide. So when shopping for insurance, ask for a quote for an all-risk policy and a named peril policy. An open perils policy or all-risk policy provides coverage for all causes of loss unless the specific cause of loss is excluded from coverage under the policy. The open perils policy typically provides broader protection than a named peril policy, as it tends to cover more causes of loss. Often the extra premium for this type of policy is relatively small. So when shopping for insurance, ask for a price quotation on both an all-risk policy and a named peril policy. If the difference in price is affordable, you may want to buy an open perils or all-risk policy for broader insurance coverage. Next slide, please. Make certain that you understand the limits and exclusions under your policy. For example, do you have replacement cost or actual cash value? Do you have enough coverage to rebuild your home after a loss? Do you have enough coverage to replace your personal property after a loss? You want to ask what is covered and what is excluded. For a full explanation on how to shop for a policy, you can refer to our consumer guide to homeowners, which is again available on our website at www.insurance.maryland.gov, or you can call us directly at 1-800-492-6116. And next slide. And this is also our information. And those are 5 easy tips to shop for homeowners insurance.
Thank you, Robin. Lastly, Ms. Dorn is going to walk us through our homeowners insurance rate guide.
Thanks, Gia. I'm going to go ahead and share my screen. Hopefully, everyone is looking at my screen now. And so Robin gave us some shopping for homeowners insurance tips. And I'm going to introduce you to our homeowners insurance rate guide. You can find the homeowners insurance rate guide on our webpage. So it's insurance.maryland.gov. You should be able to see the URL here at the top. You can actually, you can see that there's more of it there. You can just put in the URL like that, and it will come right up, insurance.maryland.gov. All right, so there's 2 different ways to get to the homeowners insurance rate guide, and I'm going to show you both. The typical way that I do it is I use this top bar. I choose consumers. It takes me to the consumer page. And on the consumer page, you can see all the different categories of the insurance products here. So it starts with annuities, auto, boat. For this one, we're looking for homeowners. And so I'm going to scroll down to homeowners, and I'm going to click here. So it is going to open up all these different links that we have about homeowners insurance. There's brochures, there's advisories, et cetera, all kinds of information. And if you scroll down to the part that says rates, this is going to show you the homeowners insurance, a comparison guide to rates. And that's what we're going to be talking about in a minute. So this is just one way to get there. I'm just going to show you both ways because I think some people will want to use this bar with the words at the top. And then some people are more visual, they want the icons, and you're going to find that right here where it says home. So if you come to our website and you can glance at these icons, you see the one that says home, click on that, and it's going to take you to that same information about homeowners and renters insurance. So in this case, I'm going to scroll down to rates again, and I'm going to open up the homeowners insurance, a comparison guide to rates. And this is as of August of 2022. And so this is what it looks like. You can look at it like this right on the website, or you can download it. You can download the PDF. And so I'm just going to look at it right here on the website. Cover page. And the first couple pages, they give you the table of contents. They give you some tips like Robin did about how to shop for insurance. Things to consider, what factors impact rates. It's interesting information to read. And I do recommend reading the first few pages, but I'm going to show you how to use the guide. So to start using the guide, you're going to scroll down to page 6. So page 6 shows you homeowners policy scenario 1. So there's 6 scenarios in here. And what you need to do is you need to find the scenario that closest matches your own situation. And I'm going to go through the different columns first, and then I'm going to show you the different sheets. So the first column is going to show you the county /city because of Baltimore City. And so you see Allegheny County, Anne Arundel County. A couple of the counties have 2 towns or cities. So for example, Anne Arundel County has Annapolis and Pasadena. And obviously, not everyone in Anne Arundel County lives in Annapolis or Pasadena. Not everyone in Allegheny County lives in Cumberland. But, you know, obviously there's a limited amount of space, so we had to choose larger population bases. So your goal is to find the scenario that closest matches your own house, your own living situation. There's a zip code, there's a home value. So that's going to be the median value in that zip code, essentially. The next column shows the construction of the house. The next column is the protection class. I think all of our examples, except for Baltimore City, have a protection class of 5. And what that represents is the quality of the fire department closest to you, and your access to like fire hydrant, etc. So you get a score, your home, your individual home gets a score from 1 to 10. And for most of these, we use 5. We just use the average number because people are closer, they're going to be closer to that access in Baltimore City. We do use a 1 for Baltimore City. The next column is going to show you your deductible or a deductible. The next column is the age of the home in years. So in, you know, some counties, the homes tend to be a little bit older, like Allegheny County. So we're using a higher number, 45 years, whereas in Anne Arundel County, 35 years. In Baltimore City, 75 years. The next column is water and sewer backup. Water and sewer backup is an option with homeowners insurance. So not everyone has water and sewer backup as part of their homeowners insurance. By law in Maryland, they do have to offer it to you, and it is recommended, and it is something to think about and consider for your situation. The next column is auto and home discount. Did you bundle? Are you bundling your home and auto? And then the very last column is the amount of liability. And so for homeowners policy scenario 1, you know, if I'm looking at Allegheny County, for example, we'll just compare Allegheny County as we go. So scenario 2, the difference is going to be, the difference from scenario 1 and scenario 2 is that the water and sewer backup limit is increased. And yes, this person is bundling. And so there's a home and auto discount. And that's significant because that discount can be significant. It could be potentially up to 20%. That's not me saying you should bundle your auto and home insurance. It's just saying if you do, you can sometimes get a significant discount. However, it's important to remember that your best rate for auto insurance and your best rate for homeowners insurance might actually be with 2 separate companies. So while yes, when you bundle, you get a discount, it doesn't necessarily mean that that is the best situation for you, but we do represent it in this rate guide. For scenario 3, we increase the deductible. So if you're somebody who's not going to have a $500 deductible, you're going to have a higher deductible no matter what. This represents a $1,000 deductible. We've increased the water and sewer backup limit a little bit. We're still bundling, and the liability is $300,000 instead of $100,000. So that's what's going to be represented here. And then for the last one, for this one, we have lowered the age of the home. It's a newer house. It has a higher water and sewer backup limit. Liability is at $300,000. It's bundled. So it's important to look at these different scenarios. Are you going to find your exact scenario? No, but the idea is that you find one that's close to your situation, closest to your situation, and then you go ahead and you look for the rates for that situation. Now, number 5 is condo. So if you're a condo owner, you're going to use 5, and we only have 1 for condo. So for example, it has $100,000 of liability and contents coverage limit of $100,000. So that's what you're going to see in condo. And then we also bundle this with renters. So renters insurance is a homeowner's insurance product, and it's also in this rate guide as well. So I'm going to move down. Oh, wait, I'm going to say one other thing. After the scenarios, there's this worksheet, and the worksheet is intended to help you. So say you choose 3 insurers that you're going to call for quotes. you can go ahead and you can put the insurer's names at the top here. And then as you're speaking to them, you can use this as a guide. You can ask them the questions that are in the guide and you can write down the information. So that way, when you're done shopping, you kind of have a place to step away and look at the comparisons and make your decision from there. And that's 4 pages long. So it really does help. It'll remind you to ask certain questions when you're speaking to an agent or a broker or a representative of that insurance company. So looking at homeowners insurance policy scenario 1 here on this first page, this first page it doesn't represent all the counties. You have to scroll down to see the rest of the counties. But on this page, you can see Allegheny, Calvert, Charles, Garrett, Montgomery. And so let's talk about Allegheny County. If you look down that column, you can see the different rates for that homeowners scenario 1, that exact situation in Allegheny County. And if you look at those numbers, you can probably get a sense of why we do encourage you to shop, because there is a lot of variance from company to company with regards to these homeowners insurance rates for the exact same situation. And I'm not gonna, as a regular, I'm not gonna call out any of these insurance companies by name, but you can look at this list and you can see that some of them are selling the product for significantly more in Allegheny County for the exact same thing. There's about 50 companies here. And so this is 2 pages right here. This is the second page. And so I do encourage you to kind of take a look at those rates right now and just to kind of drill it in that it's so important to shop. And another thing that I will say is that sometimes people just want to call the big guys, the ones that you see on TV or maybe the billboards, et cetera, the names that you know. And you're going to see names that you don't know in here. You're going to see insurers that you've potentially never heard of. And it's important for you to understand that those companies that are listed in here selling homeowners insurance in Maryland, they have to follow our rules too. So they have to follow the same rules as the big guys as well. And you should have a level of comfort in shopping with any of the insurers that are listed in our book. So once you narrow it down, you can go to the back. I'm just scrolling down. Sorry if that makes anybody dizzy. You can go to the back of this PDF or to the end of it, and you can see the insurer's phone numbers and websites. And so that information is there as well. And so with that, I will stop sharing my screen and pass it back over to Gia.
Patty, thank you so much for walking us through the rate guide. I know sometimes it can be a little bit intimidating to consumers. At this point, we are going to open up our Q&A session, starting with the questions in the chat. So if you guys have any questions, please feel free to add them now and make sure that it's addressed to everyone. So the first question we have is, if the homeowner does obtain a full coverage policy after the lender obtained a forced place policy, must the lender allow the new owner's policy to replace the forced place policy? Mary Jo?
In that case, yes, as long as that policy provides sufficient coverage to meet the requirements per the mortgage loan. So generally, if they get a homeowner's policy with sufficient amount of coverages to fully protect the home, that would be the portion of that policy that the mortgage company is concerned with, is the very first coverage listed on the policy. Coverage A, which is the dwelling. And as long as that is sufficient to protect, to meet the requirements in the mortgage contract, yes, the lender would then cancel the forced placed coverage. Now, a lender, and I will add one piece there, the lender cannot require the homeowner to get the amount of coverage A insurance that is the amount of the mortgage. The homeowner, when they're shopping and they're speaking either with their trusted insurance producer, agent, broker, or if they're talking directly to the insurer for a direct policy, they want to make sure they have that insurance professional or insurance company perform what's called a replacement cost calculation to make sure that they insure the home sufficiently to rebuild if there is a major devastating loss. And as long as they have sufficient coverage to ensure that there are funds available to rebuild the house following a loss, they're not insuring the mortgage, they're insuring the collateral, the house.
Thank you, Mary Jo. The next question, are the rates the annual premium? I think this may be referring to the rate guide. Patty?
I'm here and I do apologize for not pointing that out. Yes, those rates that you saw are annual. So if you're used to thinking about your homeowner's insurance rates in terms of month, you're going to divide that number by 12. I do apologize.
One more question, I think maybe for you. What is the difference between Baltimore Equitable Insurance for your home and other insurance companies? Does Baltimore Equitable Insurance also cover contents of home or just the home structure itself?
Patty, would you like me to take that one?
Yes, ma'am. Thank you so much.
Baltimore Equitable Insurance is an insurance company and they sell a homeowner's policy that, yes, it's going to provide all the coverages from the same as other insurance companies. So it would be coverage for your dwelling, other structures like garages, sheds, fences. It would provide contents coverage for your belongings, your furnishings, your clothing, your electronics. It would provide liability coverage, medical payments to others, as well as additional living expenses. The difference with Baltimore Equitable Insurance, it's something called perpetual insurance. When you obtain a policy with the Baltimore Equitable Insurance Company, you are going to pay a large amount upfront. It's going to be, and that's the only payment you make. You don't have to pay it annually, but it will be substantially larger than paying per each year. If at any point you want to cancel your policy with Baltimore Equitable, you do get that initial investment back. So it's sort of like you're investing in the insurance company, and then they can use the interest off of that investment amount, that initial amount. So if any point you do cancel the policy, they keep all the interest and money that was earned on that investment, and the homeowner would get that initial payment back. But it is substantially larger amount of money than what you would pay if you're getting a typical insurance policy that renews every year.
Thank you, Mary Jo. What are the ramifications of replacement costs versus cash value? Does the homeowner choose, or is the choice set by the insurance company?
I can take that one as well. A replacement cost policy, generally what that does is pay the full cost to perform the repairs to your home following a covered peril. And additionally, that would be generally also on the contents. So it would, if for instance, you lost your sofa in a covered peril, they would pay the cost to replace the sofa with a like kind and quality sofa. With an actual cash value policy, they are only going to pay the depreciated amount to repair your home or to replace the contents. Now, you can get a policy that's all cash value for all perils. Some policies may be replacement cost for most losses, but they may limit say, roof damage, even though you have a replacement cost policy, there may be coverage for your roof is only at the actual cash value. And you need to read your policy and review it to determine what coverage you have. Now, if you have a replacement cost policy, you are not allowed to, or you cannot get the payment for recovery in most cases up front. They're going to pay it on the depreciated amount. Then when the repairs are done and the item is replaced, and you've incurred that additional cost for replacement, you submit proof that you've made the repairs or replaced that item, and you recover that depreciation.
Thank you, Mary Jo. If my condo monthly fee includes money for insurance coverage for my structure, including flood coverage, should I also get individual flood insurance included in my HO6 policy?
I can try and answer that one as well. You may want to really seriously think about that. Unless you are in a basement, you can purchase, as a condo owner, you can purchase a contents policy for flood insurance that would insure your contents in the event your condo is flooded. Now, everyone at Maryland can obtain a flood insurance policy. And I tell people, keep in mind, if it can rain, it can flood. So it may be something someone wants to think about, speak to their trusted insurance producer, their agent or broker, or their insurer, and discuss with them the costs and whether or not it's something that they would like to purchase. But they can, and they can buy flood insurance to protect their contents.
If you inherited a home with no mortgage in need of renovations, how do you get homeowners insurance?
Well, that goes back to check with multiple companies. It depends on the condition of the home. If the home appears to potentially have conditions, what's called hazards or hazardous conditions that are going to potentially pose a claim for the insurance company, their underwriting guidelines might make it difficult to insure. The insurance company may ask for certain things to be corrected or fixed before they will issue the policy of insurance. And sometimes they will give them called a binder period in which to try to get those repairs completed. Again, if they are having trouble, and I would suggest use our rate guide, start calling some of those insurers that are in our rate guide. If they are still having difficulty getting insurance, then contact Joint Insurance Association, JIA. If they still are having trouble because the house, and it would be severe, it would be things like the roof is collapsing, broken windows, things that present a substantial hazard. They may have to make some modifications, but there are still some places, and speaking to an insurance professional, they may be able to find them some coverages that will, or some companies that will provide some coverage. And then perhaps as they make the renovations and bring the house back up into a better condition, they can then switch out to something a little cheaper and a little more reasonable.
Thank you, Mary Jo. Currently, we don't have any other questions in the chat, but if you do have questions, please feel free to add them. To keep abreast of our upcoming events, please follow us on social media, Facebook, Twitter, LinkedIn, Instagram, and our YouTube channel as well. You can also find out about our upcoming events at www.insurance.maryland.gov, where you can also obtain the homeowners insurance rate guide that Patty showed today. The recording of today's event will be available on our website by early next week. We will have our next Lunch with Mia event on pet insurance on Thursday, August 4th at 12 p.m. And on Tuesday for National Night Out, you can find us throughout the state at various events. You can find out about those on our website as well or our Facebook page. And we would greatly appreciate your feedback on today's presentation. The link for that presentation has been added to the chat, and a link for the interactive homeowners insurance rate guide has also been added as well. If you would like to sign up to have information regarding our future presentations delivered to your mailbox, a link for that is also in the chat. Ms. Scruggs, the information for the rate guide is in the chat box. So it's on our website at insurance.maryland.gov. Well, thank you so much, everyone, for attending. It doesn't look like we have any other questions in the chat box. I would like to give a big kudos to all of my coworkers today for your expertise. And we hope to see you at next week's Zoom event.